Welcome back to Instabills, everyone. Again, going over our intraday swing and long perspective. Again, after Powell mentioning yesterday that we have possible more tightening to come. Again, possible increases in rates, but also mentioned that data is going to tell us what exactly we should be expecting leading into our next Fed rate hike. And that data is, again, he said specifically, this Friday's non-farm payrolls, which is what we have been mentioning here on the channel. And then we have CPI and PPI coming out next week. Again, prior we had CPI coming out. We had a large doji candle coming out here because we had PPI coming out 2 days after. We had a spike, false break. We did not continue on past our 416 level that we did mention we needed to continue on past to continue on higher. And then we had, again, our gravestone doji that came out here. We did continue on lower here. Again, we had our engulfing candle here respecting our 200-day moving average. Then we have now our possible evening star that we are looking to see if we will continue on lower from close below, again, our resistance that we did get a bounce here from. We are looking to see if we will close below this level, in my opinion. I'm going to go over exactly what we're looking for from here. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instabills room, go to instabills.com in the description below. And for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the SPY with you guys here, looking at our intraday perspective off the bat here, again, looking at our daily candle structure so we can look at what we are anticipating intraday. As you guys can see here, again, sitting on an evening star setup that we did mention, again, getting a spike, getting a doji candle at resistance, again, at exactly our 20-day moving average. Also sitting here on resistance from our Fibonacci line, again, here at our 0.5 Fibonacci line 405 level, getting that clean rejection here, continued on lower on this rejection, and now we are looking to see if we will close below this level that we did have a bounce from going into today. Again, after Powell speaking today, leading into what, again, we did have a sell-off from our prior non-farm payroll that we are leading into this Friday, looking to see if we will get an increase in unemployment, if we can get, again, higher increases in unemployment so that way we can get possible decreases in inflation to come, since, again, jobs reports have been supposedly what's been causing us to increase in inflation. And then next week, again, Powell mentioned that we do have CPI and PPI coming out after getting a rejection, continuing on lower from CPI and PPI and getting a retest here. We are sitting within consolidation, making sure that our data does come out positive. If it does not, then we will continue on lower. That 392 level here, 390 level that we did mention, again, support here that we would have on our 200-day moving average, 292.92 would be that continuation on lower if we did continue on below that. And again, that would also be gap downs from prior gap ups that we had here. So that's why we would be looking for that continuation on lower if that happened to happen. That is our intraday perspective as far as continuing on lower. Now, pulling our Fibonacci lines out a little further here, this is what I like to make sure that we do look at, because as you guys can see here, we are bouncing exactly here within our 0.5 fib if we are pulling it to our lower point here. So again, we are also testing our 396.50 level. If we're going to continue on lower from this evening star setup, then we will be continuing on below 396.50, and we can assume that we could possibly test our 391 level, again, assuming that we would possibly gap down from our prior gap up. We will see exactly what happens leading into tomorrow. Very much going to see exactly what data we do get on Friday with non-farm payrolls, and then next week, CPI on Tuesday, and then we have PPI coming out 2 days after, like we did a few weeks ago. Now, looking at our weekly chart again, what we have been watching out for here on our weekly chart has been our 20-weekly moving average crossing above our 50-weekly moving average, which we have not had throughout the duration of our sell-offs for the last year that we've been selling off. So again, we are crossing higher here, looking to see if we will continue to respect our 20-weekly moving average. So again, assuming that if we do continue on with respecting our 20-weekly moving average, then we can get that bullish candle structure to show us confirmation that we're going to continue on higher. That would be that possible engulfing candle coming in next week. That could be that possible close higher. Currently, we are sitting on a rejection. We are still looking to see exactly how this candle closes. If we do happen to have a bounce and a continuation on higher intraday, and we do continue on higher, again above our rejection level that we had with, again, our inverted hammer before we did continue on lower at our 405 level, then we can assume a possible continuation, and we would be getting that confirmation from our weekly chart. So again, that's why our weekly and swing perspective is extremely key here. Again, our 20 weekly moving average for the first time, crossing higher here, looking at our monthly chart, making sure that we do keep an eye on how this candle closes. Again, we are still within our first week of this candle. We are looking to see how this month's candle closes. Again, last month we did have our green candle higher here throughout the first half of the month, and then we did end up closing lower, again mentioning that we would possibly get that rejection on our 20 monthly moving average as we were testing, and sure enough we did get that rejection. Now looking to see how this candle closes, if we will possibly close above our 20-day moving average is what we are looking for to possibly continue on higher. And the largest indicator that we have been watching as far as our long perspective has been our 12 and our 26 EMA on our MACD. Until we do cross higher, until we do start to curl back higher here, which we still are not doing, we will know exactly when that does happen, since I make sure that we go over our intraday swing and long momentum every day. We will know exactly when we do cross here or start to even begin to start to cross, and we'll see exactly when that happens. But until that happens, we cannot assume that we do have certainty to the long side, as we did cross lower here. As you guys can see, we have been selling off. So until we do cross higher here, while we do close above our 20-month moving average, then we cannot assume that we're going to continue on higher. That's what we're looking for as far as that long perspective. Recapping on our intraday perspective, again, looking at our Fibonacci lines, if you guys are keeping an eye on exactly what you're trying to look for going into tomorrow, again, in my opinion, as we are sitting within a possible gap and continuation on lower to 392, I would be looking to see if we can close below that level that we had here on our bounce here at 396. Again, our Fibonacci line that we have when we do pull it lower here from our prior bounce that we had here. So again, 396 is that exact level here on our 0.5 fib that we did bounce off of going into today. And if we can continue on below that, we can assume possible retests here at 392, 391, 390. Again, our support level that we did have a bounce from earlier this week. We will see exactly what happens. Again, non-farm payrolls, data dependent, and also leading into CPI, anticipating next week CPI, and again, anticipating PPI a couple days after, which again did give us our major sell-off. It was not only CPI that was very important, it was PPI that gave us our gravestone doji and gave us this continuation on lower. So again, making sure that we keep an eye on every data set will be very key. And again, with that said, if you are a day trader, if you're looking for these data sets, if you're looking for pre-market news, for very volatile movers that you want to be watching, again, we mentioned anything that you want to be watching in the Instabulls room. Again, join over 300 members in the Instabulls room for only $15 a month. You will never miss a breakout alert today again. And again, all of you Instabulls continuing to take what the market gives us, as we have been, making sure that we do stay cautious as we are leading into non-farm payrolls and we had a prior sell-off from. We will make sure we are staying cautious, and we will know if we do get that bullish momentum or if we are going to be looking for those continuations on lower. As usual, continuing to take what the market gives us as we have been. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.